before generative AI, and still to some extent, I'm a national representative to the international ISO TC 307, developing standards on blockchain and distributed ledger technologies. And so, although blockchain has taken a back seat to generative AI since November 30, 2022, blockchain still continues to be very important. You know that the political candidates in the U.S. are talking about making Bitcoin, the government investing in it or taking a much larger role. The state of Michigan's some of their funds just put in millions of dollars into Bitcoin. Still working on how blockchain can be an assistant in bringing together parties that didn't trust themselves otherwise to create more integrated systems that would help in tasks like continuous audit. So continuing on in our world of blockchain technology, where you have distributed ledgers that have some sort of process for taking new information, adding it to existing information using cryptographic means and methods in a way that builds the integrity of everything in the database. We've seen people talk about this kind of technology for a very long time, from a gentleman named Ian Grigg, who proposed something called triple entry accounting or bookkeeping 5 years before Bitcoin came out. That one could almost say that the Bitcoin white paper was taking those ideas and making them real. To people who are, again, trying to figure out how this new technology and new types of assets called crypto assets would be helpful in accounting, audit, and enterprise space. News item for folks here is that, again, once again, a new law in Europe has just come into play at the end of June. On July 1st, the Market and Cryptocurrency Act, Market in Cryptocurrency Act, let's try it again, Market and Crypto Assets Act, MICA, just went into effect in July. And again, really big in the European Union's crypto regulation in particular, working on licensing requirements for crypto asset service providers, rules for issuing and trading crypto assets, guidelines for stablecoin issuers, pressures to prevent market abuse and ensure transparency. So a big new law. And again, will this come into play in the U.S., where Senator Loomis from Wyoming is talking about, who has a very important place in Congress, is talking about the U.S. doing much more and being more accepting in this whole world. So again, in the research front, there's so much that's already been in play. But again, now that we have MICA in force in Europe, what might the impact of MICA and what goes on over there? How might that react to the U.S. or even for what's going on over there? Broadly, the role of regulation in transparency and stability in the crypto markets, as Senator Loomis wants, developing frameworks for integrating MICA and EU's crypto regulation into financial reporting, and again, the impact on other regions, especially the U.S. And again, you'll have these slides. Again, June 2024 goes into application, but this is happening now. The resurgence of XBRL, and again, this comes into place that in Europe, the Corporate Sustainability Reporting Directive, CSRD, is introducing a new type of reporting, mandatory reporting. And in the US, the SEC published its climate disclosure rules, although they're currently under stay. But all of these are about digital first reporting, and they are all focused around XBRL. So as Miklos mentioned, the academic community sort of, after the SEC first mandated XBRL 2010 timeframe and the introduction of inline XBRL a number of years later, we have a resurgence of interest in XBRL around ESG. And so, again, this raises, is digital first reporting on not just financial reporting, but sustainability reporting? Is it good? Should, for example, California, which has its rules 256 and 261 related to ESG, is XBRL, is digital first? Do these things make sense? And so the SEC still doesn't have a taxonomy. The SEC still doesn't have the rules. They're hoping that the work from Europe with the IAASB, EFRAG, and others will have some relevance here. But you'll be seeing an awful lot more on this in the near future. One of my biggest issues here has nothing to do with the technology and more in the fact that the audit profession as we know it, I don't want to say it's under attack, but both the CSRD and the SEC's climate disclosure rule open up for a new class of attestation or assurance providers to be the people who are going to be providing the opinions on this new kind of reporting. So you do not have to be a CPA in the US to be the folks who are going to be providing an opinion on the new greenhouse gas emissions reports. You do not have to be a CA firm, a CPA firm in Europe to provide the assurance on those reports. So in the US, the new climate rules raise a new type of party called the greenhouse gas emissions attestation providers. I call them the GAAPs or the giddy apps. And in Europe, where they had to completely change the ethics rules under IAASB, they call them sustainability assurance providers, which unfortunately the acronym is SAP or SAPS, and so you're either fighting with a very famous German accounting product or you're coming from a tree. So again, this is all sorts of different things here. What about people other than the traditional CPA providing assurance? Would you rather take an existing auditor and teach them about climate disclosure? Would you rather take an existing expert on climate disclosure and teach them how to provide assurance? What is this impact on financial reporting? And again, we don't have the framework in the US today. How might we do that? Miklos has been working for years and years and years to get the PCAOB to recognize that technology is an important part of standards. And although the AICPA back in 2005 recognized that technology might be an important thing in the confirmation process, and the IAASB a few years after, it was only last year that the PCAOB finally updated their confirmation standard to incorporate the fact that you might use technology. And a couple of months ago, the PCAOB finally updated their standards on audit risk and audit evidence to incorporate that people use technology. Although it's largely focused on making sure that auditors don't just trust the technology, Miklos's dream that PCAOB actually realized that things like analytics and technology are important. This is finally umpteen years into the process coming into play. So some great things to look at, and again, technology to deal with. I think this is the last issue here. So not as interesting to we auditors, and the SEC just published a draft taxonomy. And actually, there is the one more thing. Those of us who've been tracking XBRL at the SEC, we have always gone to a document called the Edgar Filer Manual. And earlier this year, again, that was from 2009 till this year, they have taken the XBRL part, spun it out from the authoritative document called the Edgar Filer Manual, and is now called the Edgar XBRL Guide. There were some changes that just came out in July, but they didn't tell anybody what they were. They just expected you to read through this 179-page document. It's not under the same rigorous oversight as the EFM. And so those of you with an interest in XBRL may find some research interest there. We've talked about my favorite current topic, generative AI, blockchain, cybersecurity, ESG, XBRL. These are the kind of things that I spend my time on these days. Some wonderful opportunities with the resurgence of XBRL through ESG to be doing research in that area again. Some interesting things with the SEC and Europe, saying you don't need to be an auditor to do auditing, and what that means to the very term attestation in the US, which was a legally defined term in many different countries. It's things that only a CPA could do. And again, Miklos, thank you for this opportunity. I encourage students to explore these emerging technologies and their application in accounting. And by the way, this is from Ideogram. I told it, put a professor in front of the Rutgers Business School with a big red sign saying, "Thank you, Miklos and PhD students." And this came out a few seconds later. So thank you, guys.